Welcome back. You're watching Chartbusters on CNBC-TV18. On to IPO conversations now. Kolkata-based hospital chain GPT Healthcare's issue has opened for subscription today. The IPO will close on the 26th of February and the company is looking to raise around 525 crores from this issue. We're being joined by Anurag Tantia, the director, and Atul Tantia, the group CFO of the company, to discuss the plans for the company going ahead. Gentlemen, good morning. Thank you so much for joining in and many congratulations on the IPO. I'd like to start off by asking you all first up that from the fresh issue of around 40 crores that you're planning to raise through the fresh issue of shares, around 30 crores is going towards retirement of debt. Can you share the current debt levels that the company has and what is the likely number that is going to take place post the retirement of that 30 crores?
Yeah, good morning. Thank you for having us. The current debt as on date is about 46 crores, which is at the gross level. We have about 38 crores sitting on the balance sheet for our expansion projects. With this repayment of 30 crores from the IPO proceeds, the gross debt would be about 16 odd crores, which will be repaid in this calendar year itself. So we will become debt-free in this calendar year.
Got it. All right. Hi, Atul, as well as Anurag, Nigel on this side, and welcome to the show. And congratulations on the launch of the IPO. We wish you well, and in fact, we're looking forward to keeping in touch with you all. A couple of questions. Good to hear you'll be debt-free. But what about the operational parameters? We track two, basically. One is the average revenue per bed, which is relatively lower, I think, in comparison to a larger peer. So do you see there is scope for improvement out here? And the occupancies as well, yes, they've improved from around 50% towards 60% in the first half of the year. Do you see there's further scope for improvement?
Sure. Hi, thank you for having us. So yes, the ARPOB, which we currently operate at, is around the 32,000 mark. This is in line with our regional peers. We are working in the eastern part of the country where the ARPOB level is around this mark. That being said, we are at a slight discount compared to our national peers, and that is intentionally so because we seek to target the middle income group to provide good quality healthcare. Our hospitals are located in densely populated areas, and we seek to serve the public in that 4 or 5 kilometer radius around our hospitals. So the ARPOB level is something which we are intentionally maintaining at this mark. Yes, obviously there's scope to grow on an inflationary manner and from a product refinement manner. In terms of the occupancy, we are at the 60% occupancy mark. It is slightly at a lower end because of the newly commissioned hospital of Howrah. As the occupancy of that hospital ramps up, we will be inching towards the 70% mark on an aggregate basis.
And when do you see that happening?
We are working on it and hopefully it should be there soon.
Right. So, on to the next bit that I wanted to ask you, that was on the inpatient revenue bit. The first half of FY24, the inpatient revenue stood at around 169-170 crores compared to around 300 crores that you all did in the full year of FY23. Where do you see that number in the second half of the year? And the second bit is that inpatient revenue bit is around the hospital stays is around 80% of your overall revenue. Do you plan on bringing that number down going forward?
So the inpatient revenue will grow in tandem with our overall growth. We don't intend to bring it down. The outpatient revenue for us, in fact, is on the higher side compared to many of our peers because, like Anurag said, we are a neighborhood tertiary care setup. So a lot of the people in the neighborhood tend to come to us for their first port of call. Our outpatient revenue per operating bed is almost 4,000, which is one of the on the higher side for the industry. We intend to keep it at the 80-20 mix between the inpatient and the outpatient revenue. In terms of the number for the overall year, obviously there will be growth, and the first half, if you see, there has been growth, and the second half should also follow the same path.
Got it. All right. What about international patient footfall? What is it at? And do you see that going up?
Sure. So, as I said earlier, at a Calcutta hospitals, we don't really seek out international patients. We work with patients living in that 5 kilometer radius. At our Agartala Hospital, we do get international patients because the Bangladesh border is pretty close by. At this point, we get roughly 10% of our patient volumes from Bangladesh. This will grow as the logistic reasons ease out with Bangladesh and India. This is something which will grow in the future.
Just to clarify, this 10% of volumes come in is for the company on the whole or just for the specific hospital that you were talking about?
The Agartala Hospital.
I didn't get that, sir.
Just for the Agartala Hospital.
Just for the Agartala. Okay, so relatively it's very small in the entire scheme of things for the company on the whole, right? For the hospital on the whole.
it is not a focus area for us as well.
Got it. At the start of this interview, you had mentioned that since you're a regional hospital, we need to look at it in that sort of a backdrop, which we've taken note of both on the RPOP as well as other parameters. But since you're going to be having a clean balance sheet now, going to be a listed company as well, obviously it comes with some benefits. Could you tell us, do you all have plans of diversifying to the remainder of the country as well? And if yes, what is the diversification plans on the geographic front?
Sure. So we intend to remain in the eastern part of the country. We have a plan to set up a hospital in Raipur, which should get commissioned in this calendar year, and another hospital in Ranchi, which will get commissioned in FY27. We are also looking at other opportunities in the eastern part of the country because it is one of the most underserviced part of the country in terms of good quality healthcare. Like Anurag said earlier, we target the middle income to higher income part of the society, which aspires for good quality healthcare. And unfortunately, this part of the country is lacking in terms of good quality healthcare for the middle to high income population.
What is the current payer mix, Atul? How much is it dependent on the insurance, cash, and the government bit? And what's the outlook going forward on that?
Sure. Given the neighborhood nature of our hospitals, we do get most of our patients choose to come to us. So when I say they choose to come to us, 95% of our patients are cash and insurance. We don't rely on these government schemes and corporate tie-ups. They are the balance 5%. In terms of a breakup between the cash and insurance, about 60% would be cash and 35% would be insurance.
Okay. All right. Anurag and Atul, it's been good speaking to you all. Welcome to the stock market, and thanks so much for speaking to us here on CNBC-TV18. We're going to look forward to the listing and discuss numbers in further detail. But for the time being, markets aside, you all would be taking care of plenty of patients across, the hospitals that you all are. So wishing you all the best on that front, as well as we look forward to hearing on the numbers front as well.
Thank you.
Well, time to slip into a short break. You come back, we'll get back to markets as well as stock-specific action. Don't go anywhere.